Hello, and welcome back to my YouTube channel. James here, as ever, for today's ACCA Taxation F6 video, where I'm going to walk and talk you through a Section C past paper question, as you can see above me, about PoppyCo. And this was requested from one of my lovely subscribers, so thank you very much, Ria. All of the Section C questions are dedicated to you, my friend. And if you'd like access to all of my videos, be sure to subscribe, just like Ria. The button will be below, and give this video a massive like and thumbs up, as all my videos are dedicated to my lovely subscribers. My name is James. If you haven't met me before or clicked on one of my videos, I'm an ACCA qualified member from the UK, and I teach people how to become qualified accountants for free. So in this video, we're just going to take you through a standard tax question that is likely to be on your examination because it is referring to income tax, and I'll be going through my notes that you can access this question above me. Click the link in the description of this video, have a go at it yourself, and then make sure you play the video all the way to the end. It's going to take you through all the answers, and even though it's based on the 2021-2022 syllabus, the video is designed so no matter which tax year you're doing, 23, 24, 25, the same sort of principles apply. You just need to change the figures for the different rates and allowances. So even if you're doing a later tax year, honestly, don't worry, this will still be very helpful for you. But let's get stuck into the question without any further ado. So you can see on the screen, this is the sort of standard question that you get from ACCA, and you're there going, oh my word, James, look, we've got a 10-mark question, a 2 and a 3, 50 marks overall. How on earth would you go about this? Well, no need to panic, my friend. You'll be fine on here. As to, first of all, we've got to break down the actual requirements first and foremost, if I was going through it in an exam situation like yourself. Then we'll come on to the actual question analysis, and then finally, of course, a solution analysis you can apply to check your answers off, and again working out those own figure and carried forward marks, which are so important in Section C in this exam, because for your notes on this, it is marked by a human, not a computer, so you can pick up on method marks, which are so critical to passing this exam. But let's start to go through, and feel free to take down any notes on the screen. Well, in Part A, assuming that Poppy claims loss relief against her total income for the tax year 21-22, calculate her taxable income for this tax year on there. Classic style taxation question, where for your notes and to check your answers, you've got to show all your workings here, because you're going to be potentially able to pick up on some carried forward marks that could be the difference in notching you up to at least getting 5 out of 10 to pass that part of the requirements. But you should be spending no more than 18 minutes on it to complete it. Then on to Part B. This was only a 2-mark question, so just over 3 minutes. Explain how Poppy's income tax liability in respect of her taxable benefits for the tax year 21-22 have been collected. Notice how I've got a little 1 and a little 2 there, because in the taxation examination in Section C, there are some requirements that require you to actually answer 2 elements. And the key word here being and, because that splits them out between the two. So, and if any forms containing details of these benefits will have been reported to HMRC on there as well. So you've got to be thinking about benefits, potentially a P11D on there. So that was only 2 marks, just over 3 minutes. And then the final aspect down here for your notes is a 3-mark question, so just over 5 minutes here, where we had to advise Poppy, again, 2 elements on the interest and penalties that will be charged by HMRC as a consequence of her not making the balancing payment for the tax year 2021 until the 31st of August 2022. So careful on the dates. If you want to get it written down as well, you can draw a timeline in your examination. If you go to an ACCA assessment centre, or centre-based exam, shall I say, you get a scrap piece of paper and you can actually draw down the timelines, which I would do if I had to sit this exam again. Finally, overall in your examination, this is a 50-mark question, can be really tested on the exam, 27 minutes overall. You may pinch a few minutes from Section A or Section B, but you should be spending no more than 30 minutes maximum on there, so that you answer the full requirement and the full 100 marks on here. So that nicely takes us through the actual requirements analysis, now we need to actually get stuck into what was actually asked in this scenario. And again, if you've never watched one of my sort of analysis style of videos, everything underlined are the key terms and dates and aspects in the question that will help you to answer when we get onto the solutions. It'll help you with any pro formas, calculations and working marks as well. So notice on here straight away, Poppy is employed by Zoom PLC and she's also a member of a partnership. The following information is available. So straight away I'm there thinking she's got two sources of income, partnership and employment income, and she's going to have some national insurance and taxation to take into account. No sign of any dividend income yet. The next thing to pay attention to, and you can see it highlighted in my notes, is that the examiner will try and split it out into the areas they want you to focus on. So all the employment information and income is all put together in one area, 4 elements there in the green. And then lower down we've got the partnership areas, which we'll break into later on, but just go through it section by section and start to build up a picture of what is going on in this scenario. So during the tax year 21-22, or whichever tax year you're doing for your examination, Poppy was paid a gross annual salary of £65,000 in respect of her income of Zoom PLC. So notice how I've put a little 1 there because that refers to the employment income up at the top. And then in point 2, during the period from the 1st of August 2021 to the 5th of April 2022, so partway through the tax year, 8/12, again, apportioning, a highly examinable aspect for method marks that will come up in your exam. Zoom PLC provided Poppy with a diesel-powered motor car, so diesel, not petrol, which had a listed price of £21,800. The motor car cost Zoom PLC £20,600, and it has an official CO2 emission rate of 75 grams per kilometre. The motor car does not meet the real driving emissions RDE2 standard. Poppy was not provided with any fuel for private use on there. So there's quite a few little aspects in there that we need to pick out for your notes, that when you see the list price, that is the one that you should be using in the calculations. As it does not meet the real driving emissions, there is no tax break associated with it. These are the different rules you'll need to check for the particular tax exam you're going to be doing. And in the 2021-2022 tax year, from 1 to 50 grams, that's of the emissions, we pay at a rate of 13%, and then it increases by 1% every 5 grams on there. So you need to know how much, and this is not to give away from the answer, that if we know from 1 to 50 is 13%, if we increment it up by 5 grams equals to another 1% increase, that's where we need to work out our percentage for our calculations on the benefit. That's linked to how much is going to be paid. Coming on to point 3 now, throughout the tax year 21-22, Zoom PLC provided Poppy with 2 mobile telephones. The telephones had each cost £480, so each when purchased by the company. So you've got to say to yourself, there's a benefit there, but she's not just got 1 phone, she's got 2. So are you allowed 2? Are you allowed to claim for 1? These are the adjustments that you're going to have to show in your workings. Finally, all of the taxable benefits provided by Zoom PLC to Poppy are payrolled, and therefore we're going to be taking it at the basic rate band at 20% to start on there for the benefits. Then we come on to the partnership now. As you can see here, we're going to have a few more bits of apportioning. So let's head down to that aspect here, trying to break it up for you. And again, if you want to draw the timeline like you can see now on the screen, that will definitely help you out. But Poppy has been in the partnership with Rose and Teasel since the 6th of April 2013, but Teasel resigned as a partner on the 6th of July 2021. The partners have always shared profits equally. So that is where you got to think, right, from the 6th of April to the 6th of July, that's the first 3 months, we've got 3 partners. And then after that point, for the remaining 9 months, we've only got 2 partners in terms of sharing profits and losses on there. For the year ended 5th of April 2022, so again, the period we're looking at, the partnership had tax-adjusted trading loss of £19,500. This figure is before taking into account any capital allowances, so we're going to have a few adjustments there that we can claim for. And then finally, for part 3, for the partnership, The only item of plant and machinery owned by the partnership is a motor car with a CO2 emission rate of 90 grams per kilometre. The motor car was used by Poppy and 70% of the mileage was for private journeys. The written down value of the motor car at the start of the tax year was £8,400. The motor car was sold partway through the year for £5,400 and was not replaced on there. So again, look back to your timeline, add them in on there, the dates and the apportioning we're going to have to do. Next we have the UK government securities, or the gilts, and this falls under the accrued income scheme for your notes on there to get it written down. But on the 1st of January 2022, so again in the relevant tax year, Poppy purchased for £50,000 gilts with a nominal value of £40,000. The gilts paid interest at a rate of 3% on there for the return, with the interest being paid half yearly on the 30th of June and the 31st of December based on that nominal value. Poppy sold the gilts on the 31st of March 2022, just before the tax year end, for £50,300, including the accrued interest on there. So a few different elements: nominal value, purchase price, what we sold it for, interest rates on there. So again, working marks we're going to have to be picking up on for that. And then finally we've got that links into one of the other sort of smaller requirements was about that balancing payment for the tax year 2021, where the interest on the unpaid tax, and this is where you've got to be careful with what rates apply to your particular tax year, but in this case it was 2.6%, and you'll be given the tax rates in your exam, so it's just knowing which percentage to apply and to which amount. But Poppy filed her self-assessment tax return for the 2021 tax year by the filing date. So in other words, she filed it on time, no filing penalty, but did not make the balancing payment of £2,600 until August the 31st, 2022. So this is after the year end, of course, but the filing date when the interest will start to accrue is, of course, the 31st of January 2022 for this tax year. She was not required to make any payments on account, but in other words, there's been a 7-month gap on there when she did not make the balancing payment. And that nicely takes us through, I believe, the full requirement on there, because it's just going, the scenario is exactly the same as you go through, and we've analysed that now top to bottom. So I know what you're thinking, oh my word, James, that was quite helpful on there. Can we go on to the solutions? Well, of course we can, but if you haven't already, have an attempt at it now. Before we start to look at it, pause the video, and then you can watch it all the way to the end whilst we go through the solutions. And of course, for you as well, we have some nice little breakdown as to where on earth did all the figures come from and how do we actually come to that taxable income answer on there, showing all of our workings. But you can see on here we've got it all referenced out and through, where you're going to have different areas of income. So first thing for you to write down is separating out employment income, savings income, and also the loss relief we're going to have to do some workings for. We've also got some tutorial notes on there, but we're just going to walk and talk it through the different elements. And the final thing to note down is just look on the right hand side as to the amount of working and method marks as you go through for each figure. And again, we just need 5 out of 10 to pass this element of the examination that will be linking to us getting 50 overall. But let's start to go through each element now, just top to bottom on here, to keep it nice and simple for us. So first of all, on there, for quite simply putting down the actual employment income and the salary, remember this is gross meaning before any taxation has been applied to it. That is where we have £65,000, the first one to start off, from what have we actually got for our taxable income for this particular tax year on there. So identifying £65,000, rock and roll, first half mark. Then we go on to the car benefit, where for your notes on here we have to take the list price of £21,800. We then have to multiply it by, and this is the first key thing for the apportioning as to when they actually utilise the car on here. And because it was a diesel, and this is where it applies to the 2021-2022 tax year, so be careful if you're doing another one on here, there was a surcharge for that particular tax year of 4% to any diesel car. And I also mentioned it in the question analysis, but I'll show you the changes as you can see here. The 19% is from 75 to 79, the CO2 emission rate, that goes up, as you can see, for every 5 CO2 emission rate increases, that is a 1% increase in the charge. So that is a rule that you're going to have to remember, and again, check it for your particular tax year in case any of these have changed. Then we get onto the mobile phone, where we're actually only allowed one mobile phone. Remember, it was £480 per mobile phone, and it's multiplied by the 20% because it's linked to the basic rate tax on there. So that if you have a look back to the actual question, I'll pull it up on here. It was all taxable benefits provided by Zoom PLC to Poppy are payrolled. So hence they go through at the basic rate on there. This is where we then go down to the sales, or the savings, not sales, savings income on here. And this is where we have to start off with the nominal value, okay, the nominal value, the rate that they're actually paid the interest at the 3%, and then how many months did we actually have it for, and apportioning it on there. So we had it for 3 months after the, we had 3 months after the year end we have to account for, but it was only within the tax year we had it for 3 months on there. So that's where we've taken the accrued interest for the year and apportioned it accordingly, which could have been a bit more clearer, to be honest, on the workings on here from the answers that were provided. Then we get on to the loss relief, where we're going to actually have some actual adjustments for it. But before we get onto that, again, if you have a look at the external examiner's report, which I've done a couple of videos on the channel for, so be sure to check those out. I'll link them at the end of this video. We could have just picked up, and again, another simple half mark for applying the personal allowance, which was £12,570 for the 2021-2022 tax year, linked into the actual taxable income. So again, don't miss out on those easy marks for you to pick up on. But then going down to, or in fact, before we even go on to the calculating of the loss relief, notice on here you get a half mark for applying whatever figure you got for your loss relief. So again, as long as you're showing all your workings, how you came to that figure, there was a known figure mark awarded, another half mark, for applying it to the taxable income in this case. But let's start to go down and remember that figure, 9,350, as to how we calculate it. But let's have a look first of all onto the tutorial notes. So we have the exemptions of the mobile phone does not apply to the second phone on there, so you're only allowed one. And then we've got the accrued interest on there, which we're going to be coming on to, which we've already covered actually, where we had to apportion it as a result. That's the key thing. Even though she has not received any of the interest yet, because she was going to receive it in the future. Let's head on to those trading loss workings. And again, if you want to draw a timeline for yourself, that we had 3 months at the start of the partnership for the profit share, and then 9 months afterwards. Or in other words, we had 3 directors in the first 3 months, and then 2 directors in the remaining 9 months. But just break it down, follow the workings on the side that we started, which was provided in the scenario, a trading loss of £19,500. Then we've got the balancing allowance from the motor car working, where we take the written down value of the car, which it was for that particular tax year, less the actual amount it was sold for, again, in the particular tax year, and then multiply it by the business journey proportion. Remember, in the scenario, they told us it was 70% private on there. That gives us a revised trading loss of £20,400. Then what we have to do is, from that £20,400, we then have to apportion it based on the number of directors and for the particular period they were actually working for the business. So the £20,400 profit share, or in this case trading loss, is apportioned for the first 3 months, because remember, one of the directors left on the 6th of July 2021. So 20,400 multiplied by the 3 months, multiplied by 1 out of 3, because our individual Poppy is 1 out of the 3 directors at this point. So she's entitled to £1,700 worth of the actual share here. And then later on, she's still one of the directors, still got part of the losses, but in this case now it's for 9 months and for 1 out of 2 directors on there. hence giving us, and it's referenced for you nicely on here with the little a, £9,350 is our £9,350 loss relief that we can deduct against our employment income and also deduct the personal allowance, giving us a total taxable income for the actual tax year of £46,819. Remember, that is the figure that we're given. We're not asked to then calculate how much tax is due. All we're being asked for is the taxable income as a result on there. So that was nice and handy for the first 10 marks in the bank, and I'm sure you look at this there going, crikey James, there was a lot of working marks on there just for the 2 marks on the profit share, 1.5 marks on the balancing allowance, taking the written down and the sold value. So it's just to give you an insight as to picking up on those working marks to get as many in the bank as possible. Next we come on to part B now, in terms of if not payrolled, a P11D form is needed on there. So let's just go through it. Again, note down everything that's underlined. So because Poppy's benefits are payrolled, so they go through the company, the related income tax liability will have been collected under PAYE, so through the employer, the limited company, along with the tax of her salary. So again, state the basics of what we've actually been given in the scenario. Again, that would be 1 out of 2 to actually pass that element. But the final sort of key tax rule that it will show up a student who knows it versus someone who hasn't revised it is payroll benefits do not have to be reported to HMRC on Form P11D or otherwise. So like the phone that we talked about on there, that would not have to be declared in the P11D form. So just to note that down in case taxable benefits come up in your examination. Again, we've got a timeline nicely placed at the bottom that will help you out here. And this is all about that actual interest from the gilts. That, again, a little technical question, 3.5 marks, but look at the actual workings on here that you could have picked up on at least 1 to 2 marks from just showing all your workings, along with identifying the 2 penalties. So first of all, from the balancing payment, supposed to be paid on the 31st of January, but it was up until the 31st of August. So the interest will be charged for the period, 31st of January to the 31st of August. On there, so we've got 7 months, so the charge will be for £39, the £2,600 multiplied by the rate of 2.6%, multiplied by the 7 out of 12, because we're only referring to 7 months here, and it's apportioned for the year, so that is where the amount outstanding is £39. Coming back onto here, and again just going through your actual analysis for it here. So this is the interest rate of unpaid tax for that 2.6%, and it will also be found in the tax tables in your examination. In terms of the 2 penalties, for the which we have of £130 now, we have £2,600, that balancing payment at 5% will be imposed on the balancing payment. One when it is 1 month late, and then the other when it is 6 months late on there. So we've got 2 lots of £130 on there equals 260. So 2 penalties of £130, that is where it comes from on there. So it's the balancing payment tax rule to learn in terms of the 1 month rule, and then the 6 month rule in terms of it being late. And that 2% is the rate of interest on unpaid tax that we talked about. The figure was provided in the tax tables, but again, we've got the 7 months on here in the timeline at the bottom. But the balancing payment treatment question, not a payment on account or late filing type of question, was what was noted in the external examiner's report. So just to get written down for your points on there, just to be crystal clear, that this was a balancing payment treatment question, but you could also expect to see in your exam, potentially in section C, a payment on account or late filing type of question. Late filing being they missed the deadline of the 31st of January in the question. And that nicely takes us through, as you can see on here, before Mixture Limited would be the next question, a full answer and question review of the Poppy Limited question. I hope that has helped everyone out who has their tax exam coming up. If you have enjoyed today's video, be sure to give it a massive like and thumbs up below. As ever, thank you so much for all the support for the channel. So make sure you subscribe below so you don't miss out on any future videos. Leave me a comment what you thought of this sort of style of video. And of course, if you've got any requests for future videos that I can help you out with, that could be the difference in getting that 50 plus, getting you passed in your tax exam, and one more step on the way to becoming a qualified ACCA member. But as always on that bombshell, I'll see you next time. Cheers!